Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for October 25th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, price basically traded around the 45s the entire day. 21.4475, still a very important key level. Previous week's high is 44.5. And right now, again, as I mentioned before, if price is going to start trading above 45s, the expectation is for a push into 58.5 and recent highs into 65 to 70. So we could be looking at more strength ahead, but again, it all kind of depends on this 44.75. If price can't hold that zone, retest the previous close and perhaps auction back toward 21.20. But I'll be honest, the volatility has been very poor lately, and we haven't seen much movement either way outside of this range. It's been very tightly coiled price action, and that could continue to be the case. Here's an intraday look at the ES. Right now, the first thing you see is price pushed beyond the previous session's high price, reached 49.75 and quickly rejected back through value, and is now retesting that from below. So right now, price is above the previous high, auctioned lower off those levels. Price is below the previous session's close, so far auctioned back above. So right now we have two-way trade. Fade new highs, fade new lows type of day as price continues to trade around the 45s. I would say if price tries new highs above 50, could be a fade back to value. If price is below somewhere in the 43s, could be a fade back up. So right now, could be a fade the new highs, fade new lows type of day, at least early on. Yesterday, our 42s came in handy. We talked about 42s being an area to defend as price kind of traded in that range, and we're seeing more of that now. So again, we could be looking at fade the highs, fade the lows type of day, at least early on until we see some directional conviction. Here's crude oil. Let's take a look at the higher time frame. Here in the higher time frame of crude oil, one thing we mentioned before is that price pushed into 52s, immediately rejected, never came back to test it, quickly auctioned back down, and you can see these higher lows that have come in. Price pushed below 50 in the previous session, left behind a tail, and then closed back higher. Here's the previous close, that white dotted line, and so far being defended, and price is currently trading in an inside day. Again, this is very difficult trading behavior right here. We're not really seeing much action either way. It's the edges of the range that is leading to nice rotations down, the edge leading to a move back up. So again, we could be looking at further trading range activity around 50.5. This is kind of the midpoint of the range. We need to get above 52 or perhaps below 49.75 in order for price to get outside that range and have an opportunity to fade it back toward the center. So right now we're just kind of sitting in the middle of that range. At some point we should see expansion, but we have to be patient and wait for that time to come. On an intraday basis, right now what you see is price went bid off the previous session's close, rallied up, could not get beyond the weekly pivot range, and then pulled back to the previous close. So it's trading again around 50.5, chopping back and forth. One thing I found interesting in the previous session, we were forming a nice range right here. We knew that expansion could be coming, likely to the upside, but I mentioned watch for a flush. It flushed below 50 and came back above 50, and then eventually went right back across the range, hitting 50.70. So right now, we're basically trading above 50 still. That's the key level here. So if prices were to drop into 50, I would anticipate bulls looking to defend it back up. If price rallies up to 51, I would anticipate bears to defend it and rotate it back toward 50. So right now, it's kind of right in the center of that range, and I would be patient until price reaches one of these edges in order to attempt to fade it back toward recent trading. Here's gold. If we take a look at gold in the higher time frame right now, gold has been something kind of to stay away from here lately. We thought there could be some nice activity. We thought there could be a little bit of a bounce. There has been a little bit of a bounce, but it has not really wanted to continue onward. Instead, we formed kind of a range here from 12.45 up to about 12.80, and we really haven't gone outside that range just yet. We've gotten very quiet, and I would say that this is where you have to be very careful when the market just kind of goes sideways in a range and isn't really showing much of juice either way. You have to really kind of step back, reevaluate, and pick your spots. So here I would be very, very cautious. Again, what I mentioned is if price can hold above 1260 short term, that opens the door to 1290. Failure to hold 1260 will retest recent lows at 1245 and perhaps lower, but right now this is the range. So I would be very cautious and careful with gold right now. We are showing signs that this thing can continue higher, but it's been very, very quiet. So I kind of stand back until this thing can demonstrate that it has some volatility and some intent to actually see some movement. And right now it really hasn't shown that. Here's the NQ. The NQ has been quite bullish. You can see here that new highs very, very quickly. This is something we were talking about late last week when I mentioned that we have higher lows here, and we basically have clear highs going across the highs into 48.40. I mentioned this usually leads to a nice squeeze to new highs. We were looking for anything beyond 4,900, and you can see, boom, in 2 days we got the squeeze right to 49.19.5. Now we have new highs like this, and you kind of have a little bit of back and forth range. So again, this is an opportunity up here to watch 4,900. We could trade up here all day long and not really go anywhere. And then Wednesday we could take those stops out and all of a sudden we'd be running right back across the range. So be very, very careful up here. Above 4,900 you have to be cautious. I'm looking for any potential signs of failed range expansion that would offer an opportunity to return price back to 48.40 and perhaps as low as 47.40. So this could be a nice move across the range if price cannot hold 4,900. Again, this has been a long-term bullish move here, so basically any pullback still offers an opportunity to buy and defend. So right now this would be a short-term counter trend move within the longer-term trending uptrending chart. So any pullback still a longer-term buying opportunity right now. Failure to hold 4,900 could open up a short-term wave lower, but continue to watch it because we could see more development above 4,900 over the next day or two before we see that flush come. All right, on an intraday basis, here it is. Basically on an intraday basis, what we've seen is an uptrending market. The previous session was a very, very clear trending day early on. We didn't know if it would stay that way the entire day, but the idea was to put on our pivot-based EMAs, our PIMA method, and look to buy pullbacks in this one. Price closed near highs of the day after opening near the lows. Very, very strong bullish day. Anytime that happens, you have a tendency to trade sideways and digest in the upcoming day. So, with this high at 49.19.5, we could look to see where that low comes in, perhaps 48.85 into this LVN, and then you could see a range develop from 48.85 to 49.20. So we're looking for some sort of digestion up here on these highs after this continuation. I would say 4,900 is still the major level to watch. We could see price continue to chop above that level, but as soon as price really gives up 4,900 and can't re-establish acceptance above it, we could be headed right back toward 48.40 and perhaps below. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.